Hello and welcome, as it is that of the 21st day of July 2018. My name is Derek. Welcome to the Money Charts channel. It's a trading update, and THC is down. And I trade in the sense that I don't care if these markets go up or down, in the sense that I'm not going to cheer for one side or the other. Although there's going to be times I'm going to really hope markets go up or down. But for what it's worth, it's just whatever you do, you do. When you have moves like this with the like 5 or so days up in a row, well, that means I'm going to have like 5 sell orders in a row. And I'm going to show that very soon. And for myself, risk reward management is always job number one. And I'll put that disclaimer out. So obviously everything's your own risk, own reward. And I suggest as well, make my ideas your own. And then the big one, of course, portfolio management. Yeah, that is totally job number one. All right then. So I'm going to show you my last few trades, and I'm going to start back in the last month. So we're looking at around like June 21st-ish area, June 22nd even, up to current. And the bottom is where June 21st is at, where a sell order at 8.53 would come in. Follow that up with another sell order at 9.48. And then a buy order at 8.15, a buyback, another buyback at 7.22, sell some more. This is where the 5 in a row comes in. And it took, if we look at the date from here, June 29th to July 7th or 16. Okay, so that's about 2.5 weeks without a trade, so be it. Sell 8.39, sell 8.65, sell 9.89, sell 10.81, sell 12.26, buy 10.97. So I've had one buyback now since the retracement. And one might say, you know what, you shouldn't have bought 1097, you should have even waited for 1,000. And you know what, I can make a case for both examples. Of course, for this example is always respecting the last trade. No matter what your last trade number is, if your next number is higher, you sell. If your next number is lower, you buy. That's really what it comes down to. The timestamp. When you look at this, I had a buy order in June 21st, 8:38 in the morning, and then it completed at 5:27 p.m. I most likely did not notice this event until about a few hours later, because my next buy order was placed at 9:01 p.m., executed at 11:02. So that would have probably meant that I would have found out about it like almost at 9 o'clock, and I would have put the new orders in. Because when something like this happens, after I notice that, hey, oh, yes, you sold 8.53. Well, then what I'm going to do is I'm going to put new buy orders and a new sell order. Of course, 9.48 was a new sell order. Then I would have woken up, seen that the price got to 1,000, and that it came back down. I was, this is interesting. Why would I? Okay, I understand what this would have been. What would have happened was, I would have woke up in the morning, noticed I had this buy order. I would have already had a buy order ready to go, most likely at 7, 8 in the morning, because I do every morning. What probably happened, and this will probably lead into what most likely the second example, the next screenshot that I'm going to show you, probably would have been something like that. I would have had a buy order in for a different number, and I either increased it or decreased it from the one that I originally would have put in the morning. Because that's the only thing that makes sense. Because if it's got the exact same two numbers, that means I just took the offer. Another example is I put in like 801, 804, and I'm like, yeah, I'm just going to take it. So it's either one of those two things. So I'll explain the first one later because I'm going to show it. But in this one, say you have a buy order in at 804, you're like, oh my goodness, 850, why don't you just take it now? That's probably what I might have done. So therefore, I put the buy order in. I put obviously new buy and sell order. 722 is where I would have ended up putting an order in. I most likely again changed that number because I would have put a new buy order in around 10:34. So I changed it for some reason, and it got executed at 23:49 or close to midnight. I probably would have been sleeping or close to at that time. No, I wasn't actually, because I was up, because I can see on the 8:39 sale that I placed the order in 15 plus 10, 25 minutes after the fact. And that sell order would have been automatically executed at 1:34 the next day, p.m. Eastern Time. And then I would have manually taken the sale at 865 because you see when both times are the same, that means I'm a taker instead of the maker. And it took me 47 seconds to put a sell order in after selling at 865 for 989. And that executed later that night. And then the next day, I would have been another taker, taking another sale at a 1081. Same thing 2 nights later, or 2 days later. And this one I do remember. I'm like, once again, it's close enough. Let's just take the 1226. And then this morning, I ended up just manually taking the 1097 number. I actually manually bought about 12 different things this morning, including this one. And I'm going to show you the strategy of just being aware of the order book for placing buy and sell orders. For I originally placed a buy order in around 933 I think it may have been. And when I looked at this recently, okay, gotta move it. When you look at this, as far as the order book, we got the sum, which is the net sum of the amount of Bitcoin that is needed to get to that point. The total amount within the particular trade. So in this case, or my particular bid over, I have a portion of 1.27%. It's a buyback, so it's just a small bet for me. Of course, the size, which is the total amount, and then the Bitcoin price. At 939, well, more importantly, at 940, there is almost 1.25 worth of Bitcoin in at that level. 941, there is about a third, and another 1/3 almost at 942. So from that of 940 to that of 942, there is close to 2 Bitcoin. It's not that big of a number, a little bit bigger for this order book, and it can crush those numbers very much so. However, if this area doesn't completely get taken out, I want to be just above that number, which is why I would now I would rather have a buy order at 943 than 933. Meaning, if you are barely below this number, I think you have one of 2 choices. One, where I shown here, just barely above that level, or 2, significantly lower than where you were. So at 933, you drop it to 900, something like that. Because if a wall gets taken out, don't be surprised if it has a decent move below a buy or a sell wall. Also, may I point out that these are real people that place orders there. Obviously, it should be like obvious, but it's also worth noting that these are ones whom are going to be changing those bids. Oh, you can see that they're sometimes automated. That can be the case. Or again, somebody later on might be like, okay, I'm going to remove that bid completely. I'm going to lower it, or I'm going to increase it, which is thus going to totally change the effectiveness or how good of an order that you have at that place. I'll finish it off by showing the 15-minute chart. So at 10:45 a.m., and now it's 11:21. So it's been over half an hour. The prices went from 990. What's the exact low? 990, yes. And right now it's in at 1059. That's a differential of 69 basis points. Or in layman terms of percentile, that is about 7%. And this is just over a half an hour. So when you think about that, that means if you want, you could look at situations of the example to day trade. And that's why when I state so many times when something has a big move, it's day tradeable. That means however way you can do it, buying here and selling here is profitable. And that's why I say whichever way you feel you can do it. For do you know this is a good buy based on volume, based on a key indicator level? Or do you just keep on buying all the different places? Do you bought some at, say, 1146? Obviously, you haven't sold that yet. Then maybe you still bought some at 1087. You haven't sold that yet. And then maybe you bought some at 10.38 and maybe you did sell it at 11 or 10.99. And then you could buy it back. See, all these opportunities can be available on the short term, because if you wanted to pick away at 3, 4, 5% moves, 6%, 7% moves, it can very easily be done. But when it comes down to it, and I've made the case of advantage player, not often, but quite a bit, considering I've done a lot of videos. A smart gambler will always know things like the odds, the situation, such a long word, and the probability. Let's put PRB. Stuff like that. So in a situation like this, you know the situation, the market has had very large volatile moves. So the availability to pick away at gains is now in place. For before these things are rallying, it's just going, or the way, yeah, when it was just going whatever, you're only moving like maybe 3%, 4 or 5% a day, if that. It's hard to do a lot of trades per day that way. But when you understand the situation of this thing moving from like 1,000 to 1,300 in just a short period of time, that's when you know that the game is going to change for a whatever period of time. So they're the odds. Now, this is more of a thing that's best used in poker and sports betting. For in sports, maybe you'll see a situation of something that's plus 162. That means if you bet 100, you get $162 profit. So if you go to the Vegas window with $100 on a bet like this, they'll print you out a ticket. And then if it wins, you go to the cashier. They will give you your original 100 back plus the 162 profit. In poker, maybe you're faced with an all-in or just a final betting decision on the river. The bet is, say, $100. There's already, say, 150 in the pot. That means you are getting 2.5 to 1, which works out to plus 250. But probability is really what defines versus that of the odds. For if you're taking plus 250 odds for something that's going to occur half the time, it's by means of very, very profitable situation. If it's going to happen 40% of the time, it's a very profitable situation. If you are getting something as what they call like a minus 150 odds, that means you have to put up 150 to win 100. And if you win, they give you your 150 back plus the 100. Which means you got to be right 15 out of 25 times just to break even. So if you're going to win 80% of the time, you do it. If you're going to win 50% of the time, you don't. And if you're getting a plus 250 that's going to win 20% of the time, it's a bad bet. And in other terms, again, what is available to you now that you can see that gives you the advantage? And in cases like this, any type of trading that I've talked about where you are able to buy low, sell high. For example, here you have this move, and hopefully you were owning this and able to sell. And then the key number for where it came back to was 1106. And technically my buy was 1097, so that worked out well for me. So now you can get back and you can start, if you wanted to, be in a day trading type of mentality. And I didn't do this, and I normally wouldn't. And that is look for intraday moves where you're playing like just like 5-6% moves. Okay, 1090, let's go 1050 or whatever, 1040. Okay, 1040. Okay, yeah. So here's 1040 hit, or even 1050 hit. Either way. Okay, and then you just keep on. But I don't play those moves. But technically speaking, one might say if you play the smaller percentage moves, you're going to get 4, 5, 6, 7, 8 times the amount of trades and buybacks that you would actually do better. But I don't have the automatic scripts to do it. I used to do it, but I don't really feel too motivated to to try to pick away at such small moves. For even before I was doing such, like just recently, I went long on Ethereum Classic as a day trade, put a large size on. So therefore I was, it's just not as fun. I'd rather just pick away at 20, 30, 40, even 10, 12, 15 minimum percent moves. As today when I was buying a whole bunch of things today, like I bought like 12, 13 different things, it was at least for coins that had a 10% decline against my last trade. So given that this is already a quarter hour, I'm going to end the video. There's not really much I wanted to go over, but just talk a bit more. If you're unclear about the strategy that I talk about, it's just, again, that simple numbers game when it comes down to it. You could be very effectively making lots of profits, I believe, and such without even ever looking at charts. All you do is you look at the numbers. I've shown 2 examples here, one in which whatever number you have, if you're going to sell, it's going to be at a higher price, and lower, you're going to buy based on a particular trade. And of course, I showed my last 10 or 12 trades. And then, as well, the numbers game for the order books, understanding places in which you can look to get the orders in, and oh my goodness, maybe you can see you can possibly get a better gain on a buyback or a sale based on those numbers. So again, charts are not necessarily needed. It's all about having a mathematical strategy that works. And when I say mathematical, everything basically is math, and everything to me basically is such as well. For if you don't understand the math, others would. That's a good way of putting it. And therefore, a strategy that works. And when you have such, execute it with confidence. Try to make that strategy better. What can you do, even if you can just make your ROI, your return on investment, your long-term return an advantage player would have? Let's assume you got one of, like, say, 6.24% of something as your long-term gain on a situation. If you can tweak something just a little bit to get that up to 6.28%, that's worth it. It's worth it. And in layman's terms, that means doing something that can take away mistakes, negativity, anything that can just increase profit potential long-term is, of course, going to do such. And as a trader, especially for those whom have only been doing it for under a couple years even, or because it's like poker. There's a lot to learn to get really damn good at the game. So therefore, as you get better, your long-term edge as you move forward should also start to increase. Now, if you don't have an edge, meaning you're losing at the game, well then my suggestion is to take a deep look at the strategies that you're using, and more importantly, start using those, start playing that type of or your strategy or the ones you're trying to adjust from at very low stakes. So that way you can learn at a very low cost. And I like the example of saying, oh, I want to get into trading. It's something that's cool. I've been watching these videos. I've heard other people are doing it. Hey, I'm doing well in math. And even if you're 15 years old, I think you could probably do well. Although legal terms, you're not old enough to trade. I'm just saying mathematically, as far as your brain power is concerned. Okay, I'm good at it, but I really haven't done it. You need to learn it. Let's just say you wanted to bet 100 units. That could be $100, that could be $1,000, that could be $1 million. That doesn't matter. And that's what you want to trade. Well, why not do a fraction of that, like 1 to 5? I mean, literally just give it a shot and then play around and notice, oh, wow, I made a mistake here. Or, wow, I lost this. Oh, if I would have done this. And then as you get better, start slowly adding more and increasing your bet sizes. Don't just add, like say, for example, you put 5 in when you're going to put 100. Don't put 5 in and then 95 in later. No, don't do that. Other than in the fact that you weren't sure if you were that damn good and enough time has went by where you're really confident enough in the sense, yeah, I think I got it. I realize I haven't been making too many mistakes, and the mistakes I've been making haven't been that costly. And they've been minimal as well, then yeah, if you're just trying to figure out what you thought you already knew or what you were surprised to find out you did know, then yeah, do something like that. And furthermore, yeah, instead of just doing that, maybe, okay, so you put 5 in, and even 10 or 20, depending on how like if you think you're pretty good, but you got room for error, maybe put 20 in of 100, like 20% in to start. And then as you realize you're doing better, and you can say, okay, I think I can bring a positive ROI, advantage player gain, and then you start put another maybe 20 of the remaining 95. They had 75 left. Oh man, I'm doing good. So then you put maybe 30 of it, and then the next 45 after that. Just different. This is just part of risk reward management as well. Just there's so many different levels within that attribute. Thank you for tuning in, and have yourself a great day. Bye bye.